The scheduled approval for the Ethereum spot ETF is closer than ever. At the same time, we are detecting large inflows of Ethereum into exchanges. This suggests that major institutions might sell the news. We are observing that Bitcoin is in a corrective pattern that could soon come to an end. To initiate this bearish phase, we see that Ethereum might also be nearing the end of its corrective pattern. We assume that the news will initially push the price up, trapping those who want to buy late, hoping for the potential approval of the ETF. We can tell you that all altcoins like Solana, Cardano, Polkadot are in a wedge, in a corrective pattern that, sooner or later, the question is when, will tend to fall. Meanwhile, we are seeing the traditional market, the SHIB 500, also in a corrective pattern, impacting against a macro structure. It seems to be counting the days until it retreats. Who says days, says hours. We see the same in the Nasdaq, an aggressive wedge, a corrective pattern that could be creating a macro structural trap scenario. If the traditional market seems likely to fall, it makes sense and correlates that oil prices will tend to rise. What is the reality? In oil, we have a bearish impulse. This is a corrective pattern, another corrective pattern, and another corrective pattern. These patterns tend to collapse, as we expect, in Bitcoin, Ethereum, etc., to seek their guideline, which does not necessarily have to break, which would imply that regarding the macro bearish impulse of oil, which you are seeing here on your left, all this fall, we label this as a corrective pattern, another poor corrective pattern, which we were waiting to visit this area to start an aggressive corrective phase. In other words, we would be waiting, as long as it is not proven otherwise, for the price of oil to rise while the traditional market, the SHIB 500 and the Nasdaq fall. You already know the correlation that exists between the traditional market and Bitcoin. Keep in mind that it is very close for OPEC to meet and decide whether they want to raise the price of oil or not. Meanwhile, the United States is doing everything possible, using its extraordinary reserves to inject more oil into the market to control its price. In the short term, everything points to OPEC winning this battle. If we look at oil on an hourly chart, we see a bearish impulse, a channel, a range, clearly indicating that a deceptive climatic action might impact the structure, and then we will look for that corrective pattern in the long term. But if we understand that it makes sense for the price of oil to rise, for the traditional market to fall because we are very close to market extremes, we have been in a corrective wedge impacting key levels. Not only the traditional market, but also the crypto market. What do we need? A catalyst. And that catalyst, welcome as it is for the major institutions, could be the potential approval of the Ethereum spot ETF that might happen yesterday, May 23, 24. We will be analyzing the blockchain through CryptoQuant data, and we will see how in the last 2 days, especially the last one, a massive amount of Ethereum has entered exchanges. This is not only shown here by the green bars, but if we look at the data provided by CoinGlass, we will see the same thing. In fact, in yesterday's video, we saw how recently Ethereum had been withdrawn from exchanges, hence the declining Ethereum balance. All this balance was to drive the price of Ethereum up, which is why we see this rise. Of course, this cannot be infinite, and what we are seeing now is a rotation. They have finally stopped withdrawing Ethereum from the exchanges and have started adding Ethereum to the exchanges. Now, ask yourself, what interest would a major institution or a large investment fund have in adding Ethereum to its exchange? Do you think they would do it to trade Ethereum against Bitcoin, Ethereum against Cardano, maybe Ethereum against SHIBA INU? On a day when we might have significant news with a big potential catalyst, honestly, I think it would be naive to think they are adding Ethereum to the exchanges to trade it against XRP, for example. Of course, there is no guarantee that they have introduced Ethereum to the exchanges to sell it, and no one here can guarantee anything, but excuse us if we are a bit suspicious given the cross-analysis. As I was saying, yesterday was very important because the approval of the Ethereum spot ETF, which might happen May 23, has just taken the last step before its approval. The VanEck ETF, a global investment manager, has been listed by the Depository Trust and Clearing Corporation under the symbol ETH. The DTC is a US provider of financial market infrastructure offering clearing, settlement, and transaction reporting services to financial market participants. Inclusion in the DTCC is considered a crucial step before final approval by the US Securities and Exchange Commission. So, as you can see, we are at the final step for the SEC to give the green light to the Ethereum spot ETF planned for yesterday. And remember the context in which Bitcoin, Ethereum, and the rest of the altcoins are situated. They are in key critical contexts, which we will, of course, go into detail about shortly. But first, welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity. We think it's important to inform you that the US House of Representatives has passed the Financial Innovation and Technology for the 21st Century Act, known as FIT21, with bipartisan support. This law seeks to establish regulatory clarity over digital assets. It defines the roles of the SEC and the CFT in overseeing these assets, and believe me, this is something very necessary, as until now in the United States, it was not clear who should make decisions on certain matters. All this uncertainty, combined with the possibility that the US could penalize certain companies for providing or facilitating products or services in cryptocurrencies, creates the perfect cocktail. We've seen many companies want to leave the United States if, on one hand, no roadmap is provided to crypto companies and, on the other hand, they can get heavily penalized. It's no wonder companies are saying, hey, I'm out of here. Therefore, the emergence of FIT21, although it may initially seem like an enemy to some, frankly, the crypto ecosystem needs this urgently. Let's recap the analysis we offered you yesterday, where we emphasized that cryptocurrencies are in a corrective pattern, in a wedge. Therefore, we should continue to be optimistic, as these patterns can extend as long as they want, but at some point, they will indicate that it's time to go down. In other words, a corrective pattern will be explosive and bullish, but doomed to collapse eventually. So what's the million-dollar question about these patterns? The question is, hey, when will it end so I can place a big short? This question is worth $1 million, because many traders trying to sell this pattern ended up in an unpleasant situation, and later it provided the bearish leg. But here comes the catalyst of the Ethereum spot ETF. If we consider that we are in a corrective pattern in Bitcoin, and now, focusing on Ethereum and zooming in a bit, we will see that we are in an impulse followed by a channel. This could be a range, and now, before starting the recording of the analysis behind closed doors in Crypto Insight, we were discussing expecting a bullish climatic action on this formation. It's already happening. And hey, it could continue. Do you know what we expect? For the news to be published, for extreme FOMO to appear, for everything to rise. Maybe they will set a trap for us. While the news is published and people become aware, the price of cryptocurrencies may rise in a climatic action. And when institutions have enough buying liquidity, the institution will absorb it all and push the price down. In other words, we saw how they bought the rumor and presumably might sell the news. Remember, I am sharing our point of view with you. Of course, we don't have a crystal ball, nor do we pretend to, and anything can happen in the market. But that's why we're here, to share our vision. Imagine how nice it would be to see Bitcoin on the 1-hour time frame, with the news breaking through the defense zone, generating a strong impulse driven by the news. We will see how far that impulse goes, but it could be for absorption and then to bring the market down. And there is something you must not forget under any circumstances. We are in a corrective pattern in both the crypto and traditional markets, so we will continue to look upward until proven otherwise. Here, we are speculating about a catalyst. We will have to see if that catalyst is executed, and if we end up seeing the price of crypto and the traditional market, after rising with the volatility they desire, collapse strongly through the wedges. In other words, the corrective patterns. If you found this advanced technical analysis interesting, let me know in the comments, and also share your point of view on this matter of the Ethereum spot ETF. Don't forget to support the channel by liking this video, subscribing to the channel, and clicking the bell icon so YouTube notifies you of future posts. Share this video too, as I'm sure other crypto communities you know would love to have this perspective. Don't be selfish and share with others. Good luck with your trading, and until next time.